Hello everyone, this is Across University. On July 25, the Chinese A-share market opened collectively lower, with the Shanghai Composite Index down by 0.35% and the Wind All-A Index down by 0.48%. Themes such as TMT, technology, media, telecom, continued to adjust, with significant declines in healthcare payment reform, CPO, Chief Product Officer, and photolithography machine concepts. Liquid-cooled servers and high-speed copper connection concepts also saw rapid pullbacks. However, energy stocks opened broadly higher, and bank stocks continued to strengthen. The micro-cap index fell by 0.8%, continuing its streak of declines. The Hong Kong stock market also weakened, with the Hang Seng Index falling by 1%. The non-ferrous metals and technology sectors led the declines. Meituan fell by more than 4%, Zijin Mining dropped over 3%, and Tencent Holdings fell nearly 3%. The Hang Seng Tech Index dropped by nearly 2%. In the A-share market, broker stocks were active against the trend. Guoxing Financial Holding rose by over 7%, Jinlong Securities increased by more than 2%, and First Capital Securities and Guosen Securities also followed the upward trend. Healthcare payment reform concepts declined, and high-speed copper connection concepts also saw a pullback. Precious metals stocks fell. In the Hong Kong stock market, the semiconductor sector declined, with Semiconductor Manufacturing International Corporation, SMIC, dropping nearly 1%. On Thursday, Chinese government bond futures opened collectively higher, with the 30-year main contract rising by 0.28%, the 10-year main contract by 0.1%, the 5-year main contract by 0.07%, and the 2-year main contract by 0.04%. In recent news, the four major state-owned banks have collectively announced a reduction in RMB deposit rates starting from July 25, with the 5-year term deposit annual rate dropping to just 1.8%. This marks the entry of the 5-year term deposit into the One era. The Industrial and Commercial Bank of China, Agricultural Bank of China, and China Construction Bank have all adjusted their RMB deposit rates. The largest reduction was for term deposits of 2 years and above, which fell by 20 basis points. According to information on the ICBC website, from July 25, the latest RMB deposit rates are as follows: fixed deposits for 3 months, 6 months, 1 year, 2 years, 3 years, and 5 years are 1.05%, 1.25%, 1.35%, 1.45%, 1.75%, and 1.8% respectively. From the latest disclosed second quarter public fund holdings data, dividend strategies represented by bank stocks remain one of the main investment directions in the market. Data shows that at the end of the second quarter, 4 of the top 10 stocks with the most increased holdings by public funds were bank stocks, with the top 4 funds increasing their holdings in ICBC being actively managed equity funds. In the first half of the year, besides bank stocks being favored for their high dividends, insurance stocks such as Ping An Insurance also saw increased positions, mainly due to high dividend assets being allocated, coupled with the expectation of lower insurance liability costs. Additionally, the Chinese A-share market has seen its first case of delisting due to market capitalization. On the evening of July 24, *ST Shintian announced that its stock had closed below 300 million yuan for 20 consecutive trading days. According to relevant regulations, it will be delisted by the Shenzhen Stock Exchange and will be suspended from trading starting from July 25, making *ST Shintian the first A-share company to be delisted due to market capitalization. These events also have implications for international and Asian markets. The decline in the Chinese stock market could trigger a chain reaction in surrounding markets, and the reduction in deposit rates by major state-owned banks may impact the RMB exchange rate and capital flows, further affecting international markets. Market investors need to closely monitor these changes to respond to potential market fluctuations. If you enjoy my channel, please like, subscribe, and hit the notification bell. Thank you for your support, and see you next time.